This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, November 12th, 2014. So here are the key levels that you want to pay attention to with the euro. We're looking at the high that we had set on Monday at 125.10 and the previous low from last Friday, the yearly low, which comes in at 123.58, 123.59. A break on either side is going to be required for the next key move in this market. Above 125.10 and a daily close above 125.10 would open the door for a move up towards 126.60. But even if we do see this break towards 126.60, it's important to understand that the overall structure continues to be quite bearish, while a break back below the yearly low from last Friday at 123.58 would open the door for the next move down towards 122. Sterling dollar. Cable has been locked within a consolidation over the past few sessions after breaking down to another yearly low below that previous low at 158.75, and now you need to pay attention to some key short-term levels to determine the next key move. A break below the yearly low right now, which comes in from last Friday at 157.91, would open the door for a move down towards 156.50, while back above yesterday's high at 159.45 would open the door for more of a correction up towards the 61 area. But again, ultimately, only back above 162.27 would force a shift in the structure, which continues to favor downside. Dollar yen. Dollar yen is in the process of correcting a little bit on Wednesday, following another surge on Tuesday to fresh 7-year highs at 116.10. A break back below Tuesday's low at 114.63, 114.64 would open the door for a more immediate test of 13.86, which is key short-term support, the low from the 10th of November, and then below there would officially sort of mark the onset of a correction down towards, I believe, the 112 area. But again, the structure here remains constructive, and the market is going to be looking for the next higher low ahead of a fresh upside extension. But given daily technical studies, weekly technical studies, and monthly technical studies, which are all well overbought, the risk for a correction continue to be there. Euro Swiss. Euro Swiss is consolidating following a recent breakdown below 120.45. The market is now focused on a test of the 120 barrier, which is a critical psychological barrier, and will need to break back above 120.45 and then above 120.80 to take the short-term immediate pressure off the downside, while only back above 121.40 would force a shift in the outlook. Aussie dollar. Aussie dollar is in the process of correcting higher following a break of some bearish consolidation. The market should find some resistance up towards 87.60 in favor of a formation of the next lower top and a fresh downside extension towards the 8400 area. Dollar CAD. Dollar CAD is in the process of correcting following fresh yearly highs at 14.67 in the other week. The market could still see some setbacks, but the setbacks are viewed as corrective within what is now a more well-defined uptrend. Only back below 11.22, the low from the 29th of October would compromise the short-term bullish outlook. Ideally, the market should look to put in a higher low somewhere in the 112 area. Kiwi dollar. Kiwi is in the process of correcting following a break to fresh yearly lows below 77.07 and down to 76.60, but the market should find some resistance up into the 78.80 to 80.35 area with a lower top sought out ahead of a downside extension towards the 74 area. Only back above 80.35 would compromise this outlook. The SPX 500 is now in the process of trying to correct following a surge to another record high on Tuesday up towards 120.45, with the market stalling out at 2044. But a break and close back below 2002 would be required, the low from the 4th of November, to officially mark the onset of correction and suggest that there is some sort of topping. Although the market has surged and remains locked within an uptrend by record highs, there is a sense that following a move from October 15th all the way up to the recent highs is a little bit overdone, and we could see a more sizable correction. Gold. Gold is in the process of consolidating following the breakdown below previous multi-month support at 1180. Any rally should be well capped towards the 20-day moving average around 1200, with a move seen back towards a measured move objective down towards the 1100 area over the coming days. Really only back above 1256 would compromise the bearish outlook. That's all for today. Have a good one and see you back on again tomorrow.